Welcome to Bitcoin Escape Plan. A major pivot point for Bitcoin has just been broken, and in today's video we're going to go over exactly what levels we need to be looking for to make sure that that momentum continues in the short term. As always, we start off these videos with the 4-hour time frame because that tells us a lot of the information that we need to know about the momentum of the price. Later on today, I will go over the trade that I am currently in. If you're in the Discord, it's a slightly different trade than I thought I was going to enter. I will go over that at the end of the video. Before that, I will go over the higher time frames as well. So stick it out for a little bit, 4-hour first, higher time frames, then we'll turn it back to the trade that I'm actually in. Pretty happy with it, learned a lot. Life is good. All right, if you're new here to Bitcoin Escape Plan, you can go over. It is Monday, so I will be releasing the newsletter today, right after I finish recording this video. Every Monday, I put out all of the key levels that matter, just if you want to be able to read that in your email instead of having to listen to me ramble for an extended period of time. BitcoinEscapePlan.com. Go check it out. Welcome to everyone who followed. I got like 20 people followed yesterday. That was dope. All right, so Bitcoin Escape Plan. What are we looking at? So we currently had a strong reaction to 73.9K. Really, it was a little bit lower this is the 4-hour. So we were kind of struggling at around 73.6K for a bit. We spent a long time chopping around that. And then as I'm recording this now, we are starting to pump back above 73.9K, which is great because I'm in a long, which again, I'll talk about later. So what we have to look for at the moment is sustained reaction to that. So we still have an hour and a half on this candle right here. If we close above that, cool. That gives us permission to head towards the next pivot on the 4-hour, which is 75.8K. And then structurally speaking, we don't have anything else that is going to drag us lower right now. The structures that we want to look at are, this is the bottom band of the downtrend anchored VWAP. This is the middle band of the Elder VWAP. So I explained that in other videos, but this one is drawn from 2011. This one is drawn from 2025. Both of them are telling us that we are heading towards either this target, which is about 85.2K, or this target, which is about 95.2K. Me personally, I don't believe that we're going to see 95.2K, but that is what the trend is telling us, is that we've had a strong reaction to the middle band and therefore need to head toward the direction of the upper band. That's the 95K model. And then this guy, this is the bottom band. We have had a decently strong reaction. It's still too early to know if we're gonna need to retest it again, but that is at 69.9. Which would put us back below the 50% mark of this range that we're in weekly and monthly. So we wouldn't want to see that. That would be an indication that the trend is now favoring downside again. If we were to lose, let's just call it 70K. Basically, we don't want to lose that in the short term. But assuming we continue to show strength there, then we will trend towards that middle band, which again is at about 85.2K. So that's just to understand the momentum of what the price wants to do. So if we want to look at more specific local targets, there really isn't much here. And I'll explain that on the higher time frames, like why there's a lack of it. But you can see here, even on the lower time frames, there's no volume here, dude. Like there's no volume between about 82K to about 71.4K. There's just no volume. Like the price wasn't here long enough for buyers to have conviction. It wasn't there long enough for sellers to have conviction. Nobody put enough money behind these prices the few times that we have even interacted with them, which again, I'll go over in the higher time frames, in order for the price to be confident here. You know, the price is very uncertain here, which favors it can be pulled in one direction or the other, which is again why we're being pulled in this direction at the moment. This is also the downtrend that I have drawn, I believe, from 126 as well. So we should see an interaction with that by about 78.9K, call it 79K, which I would expect. I don't have trend lines drawn from the previous all-time highs, but I would assume it's going to be something similar to here, where maybe we wick a bit above it. But I think ultimately we are going to fail below that, even if it's more reflected on the higher time frames in the 4-hour. We might get above it on the 4-hour and then properly give it up, and it might not be reflected on the higher time frames. But structurally speaking, that's kind of the only other thing above us besides these Fibonacci pivots. And as you can see, that Fibonacci pivot's sitting right on that, so that'll give us, increased awareness of a potential support or resistance there. And it's quite possible that we have a strong enough reaction to that trend line that we just don't get to that middle band. Like when I'm saying that we're going to trend towards 85.2 or 86 in general, that doesn't mean we're actually going to hit it. It just means we're going to trend in that direction. But that is kind of like the hard stop position that I would assume is right around 86K. I think that the price runs out of momentum. And I think that these people who bought up here, who are probably sitting in IBIT or MSTR, are going to sell because they're going to think, oh, okay, I'd rather take a 5 or a 10% haircut than a 30 or 40% haircut. And this may be even some of the individuals who bought there, So it really just depends on the conviction of the people in the market right now. And I don't think that this is like the strongest position that we've been in, just according to the chart. So again, we want to see a strong reaction to 73.9K at the moment. She looks fine. 75.8K is the next pivot above that. And structurally speaking, there's just like very little between here and 76.2K. 76.2K, I'll go over on the higher time frames. That's just really like, that's it. Nothing else is more important than that one. So until we see a reaction to that, everything else is kind of just going to be, basically a rise to that level. Like there's very little that could form as resistance here, essentially. Other than, again, the 2025 lows in March and April are really the only evidence that we have to find support and resistance, which we'll go over shortly. This is pretty much all I wanted to say for the 4 hour. Like I said, I'll go over. I did take a short here initially and got stopped out. I was wrong, and I flipped it to a long. The long is now in profit, so I'm just going to let that run because, as I said, probably not. There's just like not a sufficient amount of resistance or support here. So it might be possible, if momentum has changed enough, that we just run for a little bit until we hit another structure, pretty much. Let's go to the higher time frames before I dive into that trade more. So on the monthly, which you can really see this better on the weekly, but it's always just easier if we start off with the context of the monthly. We are below the monthly SMA. The monthly SMA is currently at 90.1K. There is no historical precedent for us to reclaim that monthly SMA quickly once we have lost it. Typically, it's like 7 to 11 months or something like that. We are currently on week 3 or month 4, or 3 or 4, depending on how you count it, which means we have a minimum of 3 more months, but much more likely 7+ months before we have another strong interaction with it. Now that's an interaction with it. That's not to say going above it. That's just an interaction with it, which again, at 90.1, what that tells us is that reasonably the price is going to remain below that for at least another, call it 3 to 7 months. Which again would correlate to roughly around June or July, I would imagine, is the final attempt at a relief rally. I do think that we see, again, an initial, it shows better on the weekly. I do think that we see weakness once we interact with that weekly SMA. So that has drawn lower since we talked about it yesterday on Sunday's video. It is now at 82.8K. And again, by the time we actually interact with it, I would assume that's going to continue to break down. I don't think we're going to break to 82.8K this week. I would be very surprised if we do that. I mean, it is only Monday, so we've got the full week. But I would imagine we're going to spend a little bit of time trying to decide how we feel about 76.2K and whatever that lower term time target is, the 75.4 or whatever it is on the 4 hour. I would assume that's going to take this week and next week, which means this weekly SMA is going to get pulled down even lower, probably to that 80K pivot. So by the time we actually interact with it, we'll have fought through that 76.2K pivot just to form some support, not super strong support, and then immediately have to continue that bullish momentum into the weekly SMA at a level where we are undercapitalized. There's just not a ton of money in that level, right where we need there to be a lot of people who have a strong emotional bias towards this price. The strong emotional bias towards this price is recent, is people who need it to go up because they just decided to step in, and people who bought it last year that are probably not happy that they've been in loss this entire period of time. So those people are going to now have an opportunity to take that 5 or 10% haircut instead of a 30 or 40% haircut. Some of them are going to take that. That is just reality. You know, we're going to see this part of the anchored volume profile shift into here, which is not indicative of bullish pressure. You know, that means that there's less higher volume that is still in the market at that time. You know, once that momentum shifts from people holding here to people holding there, assuming again that these individuals start to sell, which we don't know. We won't know until the prices actually fill out. They might stay the same, you know, but as this one fills out, we'll be able to see, okay, are some of these people taking profits into that range, or are these people starting to sell off from this range and that's going to new hands here? I like the anchored volume profile tool a lot. It's pretty cool. Not quite the same as these, you know, just traditional volume indicator, but it tells me a lot about important levels. For anyone who's been following me for like a long time on Threads, this is how I was able to call like 115.7K and 117.6K, is just based on where the anchored volume profile was at the time. And that's a completely free tool in TradingView. I think it's also in forecasting, or volume based under forecasting, anchored volume profile. That one's great. Super cool. So structurally on the higher time frames, what we're looking for, this is what I mentioned earlier in the video. So this is 2025. So the ranges that we have to look for is, we had candle closes at 78.2K, which I believe it's a little bit higher than these guys. This is the weekly. That is 76.9, call it 77K. So right in there is where we had candle closes earlier this year as we were breaking down, which again is like right next to those other levels in 2025. So psychologically speaking, this is going to be people who they feel like they were late to this run, and they were like, all right, cool, well, it's a haircut, I'm going to buy it. Now, some of them sold up here and they were happy with it. Some of them did not, and they are currently in loss. And they will now have to decide, okay, shit, well, do I buy more here and risk my investment going down again? Or do I take some profits and wait until the full ride of this momentum? Which it depends on the psychology and the level of, you know, like historical awareness that the individual investor has. Somebody who's buying IBIT, like that chart is only from like late 2023, early 2024. So they have no clue about like the actual 4-year cycle of Bitcoin, or just in general. Like they don't really have a reference for how the chart should behave and how it should move. So this is kind of like the psychology of those individuals is our best case scenario of support forming here. So we really need BlackRock and everybody else to be thoroughly invested in getting more people in at those levels and marketing it as like the best opportunity at those levels or whatever. Because otherwise those people are gonna be in significant loss, which some of them are going to sell then, and it's going to push the price lower. I mean, I still believe that the price realistically can go somewhere between 34 and 39K by October. I don't think that that is going to happen tomorrow, but by October, you know, like right here, this is the bottom of the Bollinger Band right there. That's at 56.8K roughly, or 56.1 or 2. And as you can see here in 2022, we had a brief interaction with that. In 2018, we did not have an interaction with it. So it's quite possible, and this is Trump was president here, so it's quite possible that we actually see it does not go the full expression of the Bollinger Band, and the Bollinger Band is expanding still on the monthly time frame. So it is still rising to the upside. So there's no guarantee that it's going to break, which means that price doesn't necessarily have to go lower than it's gone. What does that require us to believe? I mean, that requires us to believe that 59.9 was the absolute low, which would require, I mean, SPY is already starting to show some weakness. It doesn't mean that it's done for the year, but it's starting to show weakness. And I'm primarily going based off of 2007. 2007 specifically for housing and stocks was very clear as a peak, where everyone talks about 2008 as like the terrible year or whatever, but anyone who's looking at the chart saw it on 2007, like clear as day. It was obvious if you were looking at it. So that's kind of what I'm looking for on those other asset classes, is do we have signs of structural weakness in real estate and stocks? Because that's part of why gold has been ripping so much, is because everything else does not have strong faith at the moment. And while it sounds like that might be a good opportunity for Bitcoin, when there is that major flip and there is like a loss of faith in stocks and real estate, if that should come to pass later on in the end of the year, which again, I think would be probably closer to July to October, that we would see serious structural weakness be confirmed in either of those markets. That's just going to correlate with like Bitcoin will have already been kind of making its rounds. Again, the crypto market structure bill, I believe, needs to pass by July. July of last year is when it was proposed, so I believe it's about a year that they need to take with it. And yeah, I would expect if that does not go favorably, or if they kick it down the line, or whatever, if all parties are not happy, then that is going to be what ultimately causes the price to fail again at that time, after it already initially fails at 86. Again, if it even gets there, because currently it's looking like it's not even going to get there, depending on a really strong interaction with the weekly SMA, which we don't really have evidence for. You know, here we went slightly above it. So we went up to 5% above it. I don't know for 2018. That's not even 5%. I'm not even gonna waste my time getting a sticky key thing. So if we were to do it here, I hate you. Come on, you damn tool. Yes, thank you, sticky keys. You're very useful. 87.6K is roughly where we would run to there, which is right around where we start to show some structural weakness, both on the upper closes of these candles in March of 2025, as well as the bottom closes of December of 2025. So I really think that that's going to form as resistance probably, because it would just be asking, a lot for these people to not only stay in, but to add more at that, instead of them deciding, okay, well, you know what, gold looks better than Bitcoin does. Why would I not just buy some gold? Or the stock market looks like it's recovering now. Why wouldn't I just put it back in there instead of Bitcoin? You know, like Bitcoin is the punching bag. It's the easiest one for liquidity to flow to and from. I did not mean for that to rhyme, but like that's just reality. You know, it is going to be the first one that gets hit hard, and then it will recover like it always does. That's what it's designed to do. It is designed to be elastic in that nature. So it's just a matter of like how severely it's going to need to get pulled down, which, like I said, it very well may not get to those levels that I'm talking about. You know, we may just barely get a 50K Bitcoin. There's no guarantee. Like this Fibonacci pivot has opened below the Bollinger Band, but like there was one way below it here, like 6.3K was open below it here. Not super likely in that instance, and it may be the same here, that 44 is not going to happen. In which case, if you're waiting for the end of the year, you're fucked. I'm sorry, but it's not going to go that much lower, which is a possibility, quite frankly. From if the crypto market structure bill goes very favorably, then there is a possibility we see strength at all those levels and we just continue right along. That's not my base case, but it is possible. All right, let's go into that trade. I'm currently still in it. I just want to be totally clear. I traded this terribly. Like I traded this very poorly. I did put more money in, so I'm not trading with just one contract anymore. I'm currently only in 3 contracts, but I believe I had bought like 5 or 6 for shorts. I think I lost like $40 roughly, and I'm currently like $18, $20 in profit. So I'm like net loss of $20, which I'm not really bothered about. I'm still just paying attention to what does this tell me? What this tells me, a break of the Bollinger Band, the topside Bollinger Band, is take a short. That's what it tells me. Now, we have to take into context everything else that I've been saying for the higher time frames, because what the higher time frames tell me is actually we've got some momentum now. There's not much keeping us from structural upside until we get to here. There's very little that's preventing us from going there. So a short in this instance, you really had to time absolutely perfectly, and you had to be out very quickly. So what I ended up doing is I flipped that to a long, again, not at a good entry. I think 73.6, like right around here. So I am in profit. Not the worst entry, but I would not say an optimal entry. And I don't really have a rule set, to be honest with you, for this particular trade. This one would have been more clear. I don't think I had my trading phone with me at the time for this one. This one I like knew was more risk, but I'm really just trying to stick to, what does it tell me? When there's a break to the upside band, that tells me that there's going to be a short, other than periods of expansion. So we are in a period of expansion on the higher time frames, as I've discussed for the rest of the video, which means we have to be super careful when we're taking these particular trades the way that they should normally function. And in some instances, then you have to be able to take the opposite trade, Like here, we had strength above 70.8 and just continued. That might have been enough indication of taking a long at that time, and that would have been a pretty nice trade. 4% before that ended up giving up. Me personally, I think I'm probably gonna let these ones run. I'm holding to see if we have another reaction to the 4-hour SMA, which we will at some point. It just might be considerably higher by the time we actually interact with it. It is sloping upwards still, as opposed to flattening out. So there is a possibility. There's nothing at the moment structurally that's telling us we're going to fail here. And again, this candle closes in 1 hour and 14 minutes. So I'll know more at that time, whether I should add more or if it's already just going to run and I've just got to ride what I have. So that's what I'm looking at personally, is if we see a pullback closer to 72. But again, the previous daily close that we want to pay attention to is 72.8K, and 72.2 is also pretty important, that the price is going to want to hold that. So there's a possibility that it touches that, but I am loath to think that it's going to break that. So not really. It would be like a fairly risky short here. Like you're going to get, well, I guess 3% is not bad, but you probably get closer to 2%. And I think it's still favoring the upside. Like it's at 74.1K right now. Like that's favoring the upside. Like we had trouble getting to 73.8K the first time, and then had failed down to it. And then we have shown resilience on our way back to it. This is a healthy trend. Like that looks good. This looks like it was going to give it up, but that looks like it may be here to stay for a bit. So me personally, I'm just going to kind of let that run. It's not perfect, but I did learn as well, you can't, at least in the US, you can't take both sides of the trade. So I had my shorts and I tried to buy longs to counteract it, and it just closed 2 of the contracts. So I just set it to a reversal at that time, which I don't know if that ended up costing me extra money. I really am like treating this first couple months of me trading this strategy as like tuition. Like I'm fine with just like kind of learning how to take them properly. But I would imagine again that we don't see any real structural problems until about 75.8K, which should put me comfortably in profit above what my losses were. And I guess I'll just have to decide if I want to let these ride until closer to 80K, like I said. I'm not really sure. 86K, like I said, 85.2, 86 is like the upper bound of where I could believe that the price is going to trend towards. It doesn't mean I have to wait that long to cut that trade. And I think in general, like there are so many of these trades where you can take 2 to 4% swings pretty frequently, where I don't think you need to be that stressed about like, oh, there's not going to be another opportunity. Like there will be another opportunity. Sometimes they're slightly less obvious. I'm trying to define a more flexible rule set for something like this, where this is not a break of the Bollinger Band. So there's very little that was telling us that the price couldn't go back there, other than just a strong reclaim of that candle. And by then, it already would have been too late to get a prime entry there. But back to these levels, I think is probably sufficient of the previous day, that it was above the lows of the previous day, and that gave it continuation there. So it's just like you have to, I like it when I only have to know, is it breaking the upper band, and have there been multiple attempts to continue that have now failed? That tells me this is a regression trade. Cool. Same thing here. It doesn't have to be multiple, it can just be two, but if I have two candles that are closing right next to each other, which is what I was looking for here, that's why I was looking for a short, that one base, which I think that was right around when I took it, that barely went down in that next candle. There was a very short period of time where I was in profit, and then immediately I was in loss right after. It was great. Really enjoyed watching that. And we've just had continuation since. Again, because of the larger time frame structural implications that you're not going to see represented on the 4 hour. You know, if we go over to the daily briefly, like that looks great. That does not look like you should be taking a fucking short trade, you know? So I need to refine my rule set, I think. The daily is definitely like, it's more frequent that we get these indications. So like basically none of these would have been indications for a long, maybe this guy, but pretty much most of these you would have lost money on. Whereas on the 4 hour, I believe you could have made money during some of those. It would have been brief, but you would have actually had some evidence of like, oh, okay, it interacted with the 4 hour SMA. Whereas on the daily, you would have got none of that. You know, it was just dropping. That was it. So no upside interactions with the SMAs, barely any interactions with the Fibonacci pivots as well. So I like the 4 hour. I think the 4 hour is a little bit cleaner for actually identifying the entries. And then it just comes down to my exits are typically either based on Fibonacci pivots or an interaction with the SMA. Some instances, like I believe this one I had closed here when it interacted with the SMA, but there are instances where it breaks below it, you know, and you can let the trade run. This one, unfortunately, I did not let run. That would have been like a 90 or 100% trade. It would have been great. I was still very happy with my 30% or 23%, whatever it was. So yeah, those are the rule sets that I'm most focused on, is the Bollinger Band breaks, whether again to the bottom side or the top side is just going to tell me, you know, where's the momentum going, alongside the higher time frame, or not the higher time frame, sorry, the momentum based indicators, which is the anchored VWAP. That's the one that's telling me, okay, structurally, we've got room to run to the upside, and therefore I can take shorts, you know, like this one, that was an obvious short that I took, but now where those structural targets for a short, like this one was a no-brainer. You could have seen this short from space, you know. I've been talking about 73.8K for how many weeks? Anyone who's subscribing, let me know. I've been talking about that for a very long time, you know. Just like and subscribe, by the way. I keep forgetting to say that in these videos. Anyone could have seen that as a clear opportunity to take a short at that time. So it's going to be less obvious until I think closer to here. Once we get to 79K, I think it's a little bit more obvious to potentially take one. And again, there might be temporary ones in between here and there, but we're not really seeing any weakness on the daily at the moment. Like, that is a strong reversal trend that we really haven't seen. I mean, this one's pretty sharp too. And what is that? That's the highs in January. You know, we're seeing very similar to that, where it can be a complete sharp uptick for a short period of time, but that doesn't mean that it's going to be sustained. But in general, we do want to see, this is a daily pivot is 76.15, which is basically the same as the higher time frame, 76.2. So if anything, they'll just form a little bit of support there. But yeah, me personally, that's what I'm looking for in this long. I don't think that this is a good place to enter this necessarily. I guess it's not the worst place. It's just like the chart doesn't really tell you buy here. It tells you to wait if you're already in it. It technically is telling you to sell here, because again, we could have a regression back towards the 4-hour SMA, or rather we will at some point. It's just, oh my God, what did I just press? It's just, I have no idea what I just pressed. It's just a matter of how long it's going to stay above that. And it does look healthier than here. Here was a more violent uptick, so it's reasonable that it was going to break below it again. This has been a bit more sustained, and we've had multiple interactions that tell us we want to stay higher. So we don't necessarily have to return to it, although this was kind of the same. These are more significant breaks below, though. Less severe breaks below on the more recent time frame. Yeah. Structurally speaking, favors the upside for now. The further away that we are from this downtrend anchor VWAP, the better. It's just going to pull us towards, like I said, towards the middle band, which is up here, 85.2. That's pretty much it. Let me know if my fan was terrible for the audio in this video, if you managed to get this far. I'm just going to keep paying attention to 73.9K. I may possibly add a few more contracts if we see a regression all the way down here. And at that point, I'll have to accept I'll be in like 2% loss at that time, which not that big a deal. I mean, really, I think that these perpetual contracts are super powerful for being able to actually have exposure during these long leg runs. And all you can really do is try and grab them at the best entries. You know, like this one would have been a clear entry at the end of February. And there would be no reason to have closed that yet. You know, structurally speaking, that was a flip from below the middle band to above the middle band. So even in this instance, you wouldn't structurally have to close that trade until we have a retest of that middle band. And kind of same for this. This is a trade that could have been taken off of the middle band. So this is what I mean, is like you can continue to refine your rule set, but I think that you kind of have, there's like a couple different like weightings of value that you have to have. Like I do put the interaction with the anchored VWAP as very high, like almost as important as a break of the Bollinger Band. I think the break of the Bollinger Band is a little bit more indicative of short term, whereas the anchored VWAPs are a little bit more indicative of the actual trend, like the more dominant trend, which again, a break of the middle favorable is going to put us towards the top band, which is at like 95 and change on the elder VWAP, and then a break above the bottom band of the downtrend anchor VWAP after failing it for such a long period of time is going to put pressure towards the middle band. That's at 85.2K. So it's just going to put pressure towards the price there. It doesn't mean that the price is going to go there immediately, but it just means that it's going to favor that direction until it comes back down there. So if we see another interaction with the 4-hour SMA and it breaks and it goes down below this 70.8K pivot and we're back down towards this downtrend anchored VWAP, then forget what I said about March and April. It's not going to happen. You know, that momentum is gone, and then we're going to see another interaction with the middle band of the anchored VWAP elder VWAP before we see anything to the upside. But for all the reasons that I stated earlier on in the video, I think it favors us going towards 76.2K over the course of this week. And I will have exposure to that. I'm just going to chill, pretty much. I will update you on Wednesday about how this trade is going and just in general, see how the price is looking then. But for the moment, this is what we want to pay attention to is 73.9K. And really anything above 72.8, we're chilling because that's where the week closed. So we want price to stay above that. Worst case scenario, still not the end of the world. If we're down here, we really like, as long as we're above like 70.2K, we're chilling like right here, which gives us plenty of room to run to the downside if we need to. I'm hoping for the sake of my long that we don't need to, but it is what it is if that is the case, and I would just add more contracts at that time unless we show significant weakness there, which again, structurally speaking, that's still above this 69.8K or 69.9K pivot. So even if we did see a retrace all the way down to that 70.2 or 70.8, as long as it holds there, then there's nothing really preventing the price from trending upward again. So that's what I'm paying attention to. I'll give you an update on Wednesday. As always, you can follow me on Threads and Instagram for daily updates. And yeah, thanks so much. I'll see you in the next video.